Hey guys, pending home sales just hit their highest level since 2022. The Fed Reserve has a brand new chair. Veterans are reporting record trust in the VA, and Google plus Blackstone are making massive moves into AI infrastructure. Here's what all that means for you guys. As always, my name is Walter, your local mortgage expert. Whether you're ready to start your home buying journey or looking into your next real estate investment, love to help you guide you through that process. Use the link below to get started. And as always, if you find this content helpful, don't forget to like and subscribe so you stay up to date with the latest real estate and mortgage trends. So jumping into it, let's start with housing. So according to Redfin, you guys can see here, pending home sales jumped up nearly 10% year over year and are now at the highest level since September of 2022. So that's a major signal that buyers are slowly coming back into the market. It is that full swing into the buying season. So we are starting to see mortgage purchase applications increase, which tells us that the buyers are becoming more active despite rates being slightly elevated. So why is this happening? There's quite a few reasons here. So buyers may adjust to the new normal for rates. More inventory is finally starting to hit the market, and many who have delayed moving over the last 2 years simply can't wait any longer. So now that doesn't mean home prices are starting to crash. In fact, it's stronger demand could continue putting upward pressure on prices in many markets, like here in California. So for buyers, this means competition may start picking back up heading into summer. And next up, the Federal Reserve. So Kevin Warsh officially takes over as the new Fed chair, replacing Jerome Powell. And this is a huge deal because the Fed has enormous influence over the interest rates, inflation expectations, and ultimately, the mortgage rates. So Warsh is viewed by many as the market focused and potentially more supportive of lower rates in the future, although inflation is a major concern. The market is now trying to figure itself out. Will the Fed continue holding rates higher, or could we eventually see cuts later this year? Now, remember, mortgage rates don't directly follow the Fed fund rate, but Fed policy absolutely impacts the bond markets and investor expectation. So, is this leader transition could be one of the biggest economic stories of 2026. I also know Kevin Warsh is big on cryptocurrencies, so that might swing things in that industry as well. And another story that caught my attention that involves retirement savings. So you can see here I pulled up the reversemortgage.org. As always, the links will be in the description below. State-run IRAs hit record savings and worker participation levels. So state-run automatic IRA programs have now surpassed $2 billion in assets. That tells us one thing very clearly. A lot of Americans are worried about retirement preparedness. And with inflation, rising living costs, and uncertainty around Social Security long term, especially for my generation, I feel like it's not going to be there by the time we get there. Many retirees are looking for all available financial tools. This includes home equity. This is one reason reverse mortgage conversations are becoming more and more relevant again, especially for seniors who are house rich, but they're starting to have tight cash flow. For the right borrower, for the right clients, tapping home equity strategically can help supplement retirement income, eliminate mortgage payments, or improve monthly cash flow. Of course, reverse mortgages are not a one-size-fits-all. They're not for everybody, but retirement planning is part of that conversation. So this is becoming a much bigger conversation in today's economy, making your dollar stretch for a lot longer. And now here's some positive news for my veterans out there. So the Department of Veterans Affairs says veteran trust in the VA has reached an all-time high, with 82% reporting trust in the VA services. This includes healthcare, benefits, and housing-related supported programs. And from a mortgage perspective, this matters because confidence in the VA system, VA benefits that you guys do offer. So the VA loan is still one of the strongest mortgage products available. It has a zero down payment option, very competitive rates, and no monthly mortgage insurance. A lot of veterans don't realize how powerful all their benefits could be. And lastly, guys, you guys know I like to throw in my little tidbits of the overall economy, or something that I find interesting that's going on. I know with AI, taking over with everything that you're seeing. Finally, Google and BlackRock are starting to launch a massive AI cloud infrastructure company that's backed by billion-dollar investments, obviously, with two of these conglomerates here. So the goal is to expand AI computing power and compete in the rapidly growing AI infrastructure space. So why does that matter outside of tech? Because AI investment is now becoming one of the biggest economic drivers in America. We're talking about data centers, energy demand, construction growth, job creation, and huge capital investments. So this could eventually impact local real estate markets, commercial development, and even housing demand in areas seeing these major tech expansions. So to cap that off, so here's the bigger picture. So housing demand is starting to improve, or the Fed is entering a new era with Kevin Walsh. Retirement concerns are growing, veteran confidence is starting to rise, and AI investment is accelerating rapidly. 2026 is shaping up to be very interesting for housing, rates, and the overall economy. So if you guys find any of this information useful, feel free to like and subscribe, and we'll see you guys in the next one.